got a lot to cover in this free video, so let's get to it. The most important place to start is this economic calendar. Wednesday, we had the FOMC. Processing Jerome Powell really rolls into Thursday. But no sooner do we roll into Thursday, and we have the European Central Bank, which, as we can tell, has been sending the US dollar higher as the euro sells off. And then we've got Amazon, Apple, and Google going into the close. Friday, we have non-farm payroll, and all this really can be processed most easily when we go to the Fed Watch tool over at the CME, because all of this only matters in so much as where are rates going to be come March or come May. And if you'll notice, 4 3/4 to 5%. 4 3/4 to 5%, that's March and May. 4 3/4 to 5%, that's going out into June. Expectations with what we know so far, this is not including non-farm payroll, is the terminal rate is going to be that 4 3/4 to 5%. There is a nagging possibility that we might get one more quarter point hike, either May or June, possibly, and that would take us to 5 1/4. Not a shock to the system, though. Not a reason at all for equities to do much more than a little bit of weakness to process this slightly, and I do mean slightly, more hawkish outcome. All right, so that takes us to the charts, gang. What do we do in an environment where we've got this much volatility? What do we do in an environment where we are dealing with so much uncertainty, whether that be the U.S. Central Bank, European Central Bank, Amazon, Apple, Google earnings, and even tomorrow's non-farm payroll? We shorten the time frames. And a lot of that is landing on the 1 hour and the 5 minute. Now this morning, my focus was on the 5 minute and looking at the hourly price movement ranges. And this is a very specific tool for time frames, basically 30 minutes and less. I like applying this to the 5 minute chart, maybe the 2 minute chart. Those are my preferred day trading time frames. And the idea was earlier this morning, most bullish structure, meaning the best uptrend, right? When I say structure, it's trend. And the best trend was happening in the NASDAQ. So the whole plan here was buy the dip, and that is a trending mean reversion. Trending, here's our mean, right? Including the hourly price movement ranges, and reversion. Reversion is another way of saying retracement. Trending mean reversion, and that pretty much took us through the morning, through the lunchtime doldrums, until just most recently as we get into the last hour and a half of the day, where the trend is starting to roll over. How easy is this to see? Look at the red grab candles. The other trade that we looked into was the bond trade. Now the bond trade was very much a bullish, but at the time, slightly choppy move into the support of the hourly price movement ranges. Ultimately, what we want to think about is, this is support, gang. What is support? Support are buyers. What are buyers? Buyers create demand. Support, buying or buyers, and demand. And that's what we're looking at. Identified by what? Time. In this case, hours. We got to get more specific about time. All right, we're talking about hours and volatility. So we look at the hourly volatility over an historical volatility, so over a 6-month period of time, and say, okay, what is the typical pattern when it comes to volatility? And yes, that's exactly what this is. It's a time and volatility-based pattern approach. Buy that move, take profit as we move up into the resistance of volatility. So this is volatility support, this and this volatility-based resistance. And these are plotted on the screen as markets are moving, so we know where these zones are. So ZB was another market we bought. And why do we want to buy that? Interestingly, I like to see notes and bonds move higher with the indices. Now, there is one strange trade, and that's the 6E. We ended up shorting this one, and that's because it traded up into the resistance of time and volatility, and you can see it continues to move lower. We also took a near-term little short, and I'll show you exactly what we were looking at. It didn't move down as much as I would have liked, but it did hit our first target. Resistance. What is resistance? Sellers. What are sellers creating? Sellers are supply. So resistance are sellers. Sellers are supply. And that's where we get that ceiling. Ultimately, what we have is a lot of probably jockeying around for position in light of what is going to be a winding down of the Federal Reserve, but we're not quite sure at what level or when, but we know it's going to be probably by June. And the next set of possible rate cuts, right? We have hikes going into March to June and cuts starting as soon as possibly November. All right, now let's talk about the 1 hour, because there's some cool things that are on my radar for the 1 hour. So for those of you that are not familiar with the 1 hour, the job of the 1 hour chart is to show us where the hourly price movement range is, where compared to the daily price movement range. So we have a daily price movement range, right? We can compare these things. They're two different things. Every session, every day, we have exposure to, now we have a webinar coming up. So I just want to mention that while I'm explaining this to you all. This is the daily price movement range. This is where we look back at historical volatility, and for every day we find that time and volatility-based support and resistance, as opposed to every hour. It's a different curation of data. It's a different data set. It's a different set of support and resistance levels because we're looking at price from a different point of view, hourly versus daily, and it's going to present very different zones. In this case, take a look. We're actually getting down towards, and this has happened a number of times. I'm not just showing you one time, right? Let's take a look at the last 3 times copper moved into support, moved to resistance. Support, moved into resistance. So you better believe what I'm looking for next. I'm looking for copper to sink down into the daily price movement range and head back up into resistance. Now, if copper's trading, let me give you one more bonus idea, and that is Freeport-McMoRan. Freeport-McMoRan will usually, unless we're dealing with earnings, Freeport-McMoRan will usually move with copper. So we're getting a very similar setup on Freeport-McMoRan. We had a great setup on Freeport on the daily time frame, which I love to short-term swing the hourly and short-term swing the daily. And we had an opportunity doing that Freeport-McMoRan actually back in here, back at the end of December, beginning of January. So you better believe I'm looking for another opportunity for another leg higher, and not only copper, but Freeport. As we take a look at this environment, a couple big shifts that we're going to make, and that is mostly time frame shifts and shifts to using time and volatility, whether that be hourly or daily. I'm going to talk about the daily. I'm going to talk about the challenges of 2023 and how I'm using slightly longer term intraday time frames to tackle those short term swings. Super stoked. Save the date, February 15, 8 p.m. This is just a sampling of what we're doing with it. Hope this helps. Sorry, it was kind of a longer video, but if you have any questions, if you have any comments, feel free to leave them below. I check them every evening. Thanks as always for smashing the like button. I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.